Good morning, everyone. So, in our previous lecture, we just started with the introduction to indirect taxes and three small concepts that we have seen. That is, what are the various taxes that got subsumed into GST, and second aspect, the model of GST, and third, the position of goods. So, even after implementation of GST. From this, we understood that in GST there are two non-taxable supplies. What are the two non-taxable supplies in GST? Alcoholic liquor for human consumption and petroleum products, 5 petroleum products, and remaining goods and services are covered under the ambit of GST. But few are taxable, few are exempted. Exempted means what? You don't have to pay GST, but is it covered under the levy of GST? Yes, it is covered under the levy of GST, but right now it is exempted, and whenever the exemption is withdrawn, it will become taxable. So that's how it will be working. For example, so we have one exemption in the past. We had one exemption. Room tariff up to 1000 rupees per day is exempted. For example, you are staying in a hotel and where the room tariff is less than or equals to 1000 rupees per day. So that particular room accommodation was exempted, but now that exemption has been withdrawn, which means whatever may be the amount, it will become taxable. Even 800 rupees per day, 600 rupees per day. For example, you take an example of hostels. Hostels. Usually in hostels, what will be the monthly charges? What could be the monthly charges? Maximum we will see. How much maximum it could be? 10,000? 15,000? Let's take 15,000, all inclusive. Like they are giving a superstar treatment and all. So even then 15,000 rupees is on the higher end actually. Because people spend somewhere 7,000, 8,000, etc. 15,000 is really big amount. But even then, per day it will not cross 1,000 rupees. How? 15,000 divided by 30 or 31. How much per day? Less than 1,000 rupees. Previously, all the hostels was enjoying this exemption. But now, the hostels, every hostel will be covered under the taxability. Why it will be covered under the taxability? So, this particular 1,000 rupees point is removed. Exemption is removed. So, now it became taxable. So, then all the hostels are required to pay GST, yes. Now, what they are telling? GPay, accounted and all not accepted, pay by cash. You understood? Go to ATM, withdraw cash and give us the cash. So then only we will give you hostel accommodation and all, correct? So because GST issues is there for them, so cash transaction is the better transaction. Why? No one will know that the transaction has happened unless otherwise some income tax department or GST department conducts a raid and they identify that this person is holding so much of cash and that particular cash is nothing but by way of some transactions that he has earned, and then penalties, etc. But only when he caught. Correct? Only when he get caught. At the time what he will do, he will share some wealth with the officers who are coming for the raid, search, etc. and all, and they will try to escape. So this element of cash transaction is something like a devil in the country. So we cannot eliminate that. It's very, very difficult. So people are like, government is trying, government is making lot of efforts to do that. They are calling back 2000 rupee notes and they will call back 500 rupee notes. How much ever a digital transaction is happening also, but still this cash transactions could not be eliminated. But that is there. That is always a loophole. Okay. But what I am trying to convey is that usually government will give certain transactions as exempted and they will remove the transactions from the exempted and make it taxable. But all the goods and services are covered under the levy of GST. What are the two goods which are not at all covered is what we have seen, that is alcoholic liquor for human consumption and petroleum products. And then you can see the first page. What are the major features of indirect taxes? Already you know about indirect taxes, but one point which I wanted to highlight here is that what is the difference between income tax as well as indirect tax when it comes to computation point of view? Can there be both indirect tax and income tax on the same transaction? Is it possible to have both indirect tax as well as income tax on a single transaction? Is it possible or not possible? What is your view? Possible? For example, there is a chartered accountant who gets fee from the client. On that fees he need to pay GST, and on his profit he will have some profit. So this fees will be his gross income minus his expenses. So he will get some profit. On that profit he need to pay income tax, PGBP. Are you getting this? Same way, I am selling some assets other than land and building, because land and building will not be treated as goods. Right now we are dealing with what tax? What is the tax name that we are dealing with? Goods and services tax. Will land and building come under goods? No. So there is no GST on land and building. But there are some other assets. On that other assets, when it is being sold, will there be an attraction of capital gain tax? Yes. But the capital gain tax, that is income tax under the head capital gains, we will compute on what? Gross or net? Net. What is that net? Full value of consideration minus cost of acquisition or indexed cost of acquisition on the difference. But on the entire sale price, we need to pay GST. So now, what is the point of difference that we have understood here? GST or indirect tax is computed on the gross, that is revenue, whereas income tax will be computed on the net. What is that net? Profit, that is gross minus expenses. On that we will be computing the income tax. That's the reason why if you take any head, so you take house property, rental income minus a standard deduction we are giving, correct or not? Same way you take capital gains, there is deduction. You take PGBP, revenue, income we will see, and minus expenses, big list of expenses and all we will be deducting, correct or not? But in GST we will not do that. In GST it is always the gross amount involved in the transaction. On that gross amount only we will pay. Same is the case of customs duty also. Customs duty is never on the profit. Customs duty is on the price involved in the transaction. So that is the difference. Here I am talking about, you can see. So revenue equals to gross collections. Income equals to revenue minus expenses. So tax is not on income but on revenue from sale of goods or services. Which tax? GST or indirect taxes. Whereas income tax is on what? Net. That is on income. What is it? Income? Revenue minus expenses. So is there a possibility of both indirect taxes as well as income tax on every transaction? Yes. Yes, generally. But there are some exceptional cases where there will be income tax but there is no GST. There is GST but there is no income tax possible. For example, renting of residential property, we get a rental income. On that rental income, whether we need to pay income tax? Yes, because whether the property is residential property or commercial property, the moment you give it on let out, so you get the rent, on that you need to pay income tax, income from house property, correct or not? But in GST, renting of residential property to an unregistered person is exempted. So generally what I said, on every transaction there will be income tax as well as indirect tax. This is general rule, but there are exceptions as well. Sometimes there will be only income tax but there won't be any indirect tax, that is GST is not there. For that example only I gave you renting of residential property. Okay. Same way, sometimes there won't be income tax but there will be indirect tax. Example, so in income tax, this section 10 and section 80, we have some exemptions. In 10, if you see charitable trust getting money is not required to pay. That is which charitable trust? Religious trust. 1023C, 1023D. Then 11 and 12, regular charitable trust. Correct or not? And even the section 80, that IA, IB, certain units are their industrial units, they are exempted from payment of income tax on their profits. Correct? Even though they are not required to pay income tax, Are they required to pay GST on the transaction that they are doing? Yes. Are you getting this? So, general rule is what? There will be both income tax as well as indirect tax. But sometimes there will be exceptions where there is only income tax but not GST, where there is only GST but not income tax. But generally both also will come, and you should not get confused. Sir, income tax is there, sir, why there is indirect tax then? You understood? Then one more example also I will give you. Salaries you take, salaries. On salaries there is income tax, but there is no GST on salaries. Got it? There is no GST on salaries. It is excluded from supply. The transaction will not be, that is employee receiving salary from the employer, he is not required to pay any GST, but is required to pay income tax. Okay. Then, sir, is there a possibility of double taxation because of DT and IDT? Yes, that is what I am discussing now. In IDT itself, is there a possibility of double taxation? Yes. Yes. How, sir? You take cinema tickets, there is entertainment tax and there is GST. Both are there, correct? So when you go to a cinema theater, say ticket price 170 rupees, for example, I am taking, okay? So because majority of the cinema theaters in Chennai are charging 170, 180 or 190, this range only is the ticket price, but before adding any taxes, okay? So then on the top of that, entertainment tax will be added. On the top of the GST will be added, 28% or 18% GST will be added. So that's where it will go to 250 rupees, so 300 rupees and all ticket price. But I am talking about the value before adding these taxes. So entertainment tax also we are paying and GST also we are paying. Both are indirect taxes or not? Yes. So will there be a double taxation possibility? Yes, there is a double taxation possibility. So is there any measures that are taken by the government? No. Why they are not taking any measures? Why are they bothered first of all? Why are they bothered? It is revenue, you got it. Unless otherwise people protest, government will not do any voluntary action, because here there is a conflict of interest. Government's job is what? To make more and more money. And people, till the time they are ready to pay, they are able to afford to pay, so they will be paying. Now, what happens? So the moment people understand that this taxes and all is killing them, so what they will do? They will start doing the protest. When they do the protest and they say we don't need any freebies etc. and all, because ultimately the inflation is rising, the prices are rising, we don't need your any benefits that you are giving. So then automatically government also what they will think, okay fine, as people don't want any freebies etc. and all, we can reduce the taxes. So this tug of war is only happening here. That's the reason why. So there are many transactions which may get double taxation. So but for that we can't do anything with respect to that. It is not like, so in income tax we have DTAA. One country and another country, if the same income is getting taxed, we have double taxation avoidance agreements. But in India we don't have anything like that. For indirect taxes, sir, same transaction may have both indirect taxes. Any more than one indirect tax also is possible. Are you getting this? Then remaining points and all general here, that is, it is a major and important source of revenue to government. Will you agree? Because the share of indirect tax is high compared to income tax. Liability is on one person and burden is on another person, correct? And who will have the ultimate burden? Consumer. Who will have the ultimate burden? Consumer. And wider tax base as more number of people are covered under indirect taxes, correct? Because you would have read recent statistics as to how many people are filing income tax return in India. So what could be the percentage of people who are filing income tax return? Tax returns with payment of tax. Hardly 2-3% only. Filing is there. But in that, they are going for refunds. You understood or not? Refunds, income tax return filing with tax I am talking about. Very less number of people only will be paying literally the taxes. Remaining and all what they will do, anyhow TDS is there. So they will file the return only for the sake of getting the refund. So the tax base, if you see, so of income tax is very less. But indirect tax, majorly everyone is covered now in indirect taxes, correct? So even small traders are also covered, everyone, all small service providers. So it's a wider tax base. Promote social welfare. This is bullshit. I don't know how it will promote social welfare. How indirect tax will promote social welfare? As high rate of tax are levied on tobacco products. If you really wanted to create social welfare, you should ban the tobacco on tobacco products. You should not levy more taxes on tobacco products. As I am levying more tax on alcohol, I am levying more tax on tobacco product, because of which the consumption has come down. No, it will not come down and all. It will be the same. Sir, did you see any person complaining that, I am not able to consume the liquor because, I am not earning money? No, somehow they will do. They do crime or they do anything else, but they want to satisfy the desire of consuming the liquor and tobacco. So therefore, price increase. Real price increase. Petrol price 1 rupee increase. People will do lot of overaction. But the same alcohol price increases by 10 rupees also. It's okay, fine. We will pay. Tobacco product increases by 5 rupees. It's okay. We will consume. So why like that? So because that's a different altogether. These are like divine goods. You understood or not? Price inelastic goods. And therefore consumption and all will not come down. So that's why I said it's a bullshit point. How it will promote social welfare, I don't know. It is regressive in nature. This also you know that. So direct tax is progressive in nature and indirect tax is regressive in nature. Regressive means what? Irrespective of your income, you are required to pay indirect taxes. Correct? Now, let's take a product. The same product, for example, toothpaste. So, irrespective of the income group, everyone will buy the toothpaste. Correct or not? A daily wage earner also will buy the toothpaste. So, and even a rich person also should buy the toothpaste. Correct or not? Maybe brand, etc. will differ. That's okay. But toothpaste is something which is common, na? Everyone will buy. Now on toothpaste there is GST. Now on every person, irrespective of their income status, there is the same amount of tax. But direct tax is not like that. So low income earning people will pay lesser income tax. High income earning people will be paying higher income tax. Correct? That is what progressive versus regressive. So these are some features of indirect taxes part. And you don't have to remember this and all, just for knowledge sake, okay. Then this aspects we have seen already, what are the various old indirect taxes and milestones in implementation of GST. Here we have few key points to learn. What is the constitutional amendment that has happened for implementation of GST? Previously, 7th schedule to the Constitution will talk about the powers of central government, state government, etc. So this 7th schedule to the Constitution was divided into 3 lists: union list, state list and concurrent list. Union list means who will make the law? Central government. State list means who will make the law? State government. Concurrent list means who will make the law? Both central government and state government. Tax related entries were not there in concurrent list. But tax related entries were there only in union list and state list. Now GST. Is GST a single tax model or a dual tax model? Dual tax model. In dual tax model, who will be levying tax? Central government as well as state government. Now we have to amend the 7th schedule to the Constitution to empower both CG and SG to levy the GST. That's the reason why there was a requirement of Constitution amendment. And the Constitution Amendment Act has happened in 2016 or 2017, 2016, not 2017. So we will think GST law is implemented from 2017. So therefore Constitution Amendment also happened in 2017, but wrong. Constitution Amendment happened in which year? 2016. Say this. Constitution Amendment Act, Constitution 101st Amendment Act 2016. Whereas the bill was presented in which year? 2014. Okay, Constitution Amendment Bill 2014, whereas Act is 2016. Okay. So why there is a difference between the bill number and the act number? General knowledge. Bill wise if you see 122nd, act wise if you see 101st. Why there is a difference like this? Not every bill presented in the constitution got passed. So it will be rejected. There are many bills that got rejected. So bill wise the order is 122nd and act wise the order is 101st. Okay. And therefore what is the effective date of implementation of GST across India? 1/7/2017. And which was the first country to implement GST in the world? France. So these are the key points which you need to know, maybe for MCQs, somewhere it may be tested for that purpose. France became the first country to implement GST. So whether GST is in India alone or in many countries, approximately 160 countries before India adopting GST have adopted. Okay, not that we are only creating it for the first time, it was already there. And now we will see what are the types of GST. In order to know the types of GST, please take page number 6. We need to know the difference between intrastate supply and interstate supply. First, indirect tax is a dash based taxation. No, what based? On what base? Event based. Dual GST only, but on what? Event based taxation. And like that, GST, what is the event? The event is supply. Got it? GST, all indirect taxes is event based taxation. But GST, what is the event? Supply of goods or services. Like for example, excise duty event was manufacture, sales tax event was sale, and customs event was import or export. Like that, what is the event under GST? Supply of goods or services. So what is the meaning of this supply? We will be learning in the next segment, next chapter. The next chapter we will learn in detail, that will go for around some 6-7 classes, only knowing what is the meaning of supply. Got it? So that's a very big definition which we will be seeing later. But right now try to understand supply is a taxable event. So this supply is divided into two. What are they? Intrastate supply and interstate supply. Intrastate supply versus interstate supply. What is that it is running in your mind? Intrastate means within the state. Interstate means one state to another state. But this is just the layman understanding. But the real meaning of intrastate or interstate is not within the state or from one state to another state. There are two factors which we need to understand. So depending upon these two factors, the transaction will be either intrastate supply or interstate supply. What are the two factors? Location of supplier and place of supply. These are the two factors. So what are the two factors here? Location of supplier and place of supply. These are the two factors that we need to know. So what is location of supplier? Location of supplier. Where the supplier is located. Where? How to identify? If they are registered, that registered place. If they are providing services from their registered place, that registered place. Suppose if they are registered but providing services from a different establishment, then that fixed establishment or business establishment will be taken as the location of supplier. For example, let's try to understand that, say, I have registration in Andhra Pradesh. I don't have, but for example, I am telling you. I have registration in Andhra Pradesh, GSTIN in Andhra Pradesh, registered address in Andhra Pradesh. But I am taking classes in Chennai in a fixed establishment. Then what will be taken as the location of supplier? Chennai. So why? Because if the services are rendered from a fixed establishment, that fixed establishment will become the location of supplier. So then, sir, here I have to get any registration? Of course, yes. Of course, I have to get a registration here. Why I should get a registration? Remember, every state from where we are making business, we need to get registered in that state. We don't have centralized registration concept in GST. You might have studied this in Inter also. Can we have centralized registration in GST, single registration across the country? No. In every state, we need to obtain separate registration if we are making business from that state. Are you getting this? So, therefore, the location of supplier is, if they are registered, that registered place. What if they are not registered? Then whichever place they are rendering the services. What if they are not rendering services from a place? What if it is online transactions, etc. and all? Lot of freelancers are there now. What they will do? Like this software people or teachers who take online classes, etc. So, what will be the location of supplier? Usual place of residence. You got it? So, that will be taken as the location of supplier. So, 3 points in location of supplier. Again, we will come across this in place of supply. Place of supply we will learn in the detail, but right now to try to understand what is the meaning of location of supplier. 3 things. Number 1, registered place, fixed establishment or business establishment, usual place of residence. You please write down below that chart. I have given some space for notes now. There you write down. Usually location of supplier is, usually location of supplier is registered place or fixed establishment or usual place of residence. Usual place of residence. So, this will be taken as the location of supplier. Okay. Now, you understood what is the location of supplier. So, we can easily determine that. So, sometimes it will be the place, registered place. Sometimes it will be the fixed establishment or a business establishment. Anyway, you can understand. Okay. And suppose in the absence of that, the usual place of residence will be taken. Okay. Then what will be the place of supply? Again, that is a very big chapter. We have one separate chapter itself on this place of supply. Depending upon the transaction, the place of supply will differ. Sometimes the place of supply will be location of recipient. Sometimes the place of supply will be location of supplier. Sometimes it will be the location where the immovable property is situated. Sometimes it will be location where service are performed. Like the different points we have for place of supply. For each transaction, the place of supply will differ, which we will be learning again in future. So, but only when you know these 2 factors, you can determine what is the nature of supply, whether it is intrastate or interstate. Now listen, concentrate. If location of supplier and place of supply is in the same state or same union territory, it is what? Intra. Same state or same union territory. Which 2? Supplier and recipient or supplier and place of supply? Supplier and place of supply. It is not location of recipient. Okay. How, sir? Generally recipient will be in the same state, na sir? Not necessary, I am telling you na. For example, say there is a CA office pa, okay, there is a chartered accountant's office. So Messrs A, B, C and Co, chartered accountants, so Tamil Nadu, okay. ABC and Co, chartered accountants, Tamil Nadu, and they got a outstation audit assignment. Possible? Or they should get always audit in the Chennai, in Tamil Nadu? Not necessary. No? You might have done a lot of outstation audits. It all depends upon what? Contacts, and it depends upon the output. So, how best your firm is able to do, and it depends upon the price. There are many factors. So, now this firm has got an outstation audit from Mumbai. Okay. So, now where is the client office located? client office is located in Mumbai. So client office is in Maharashtra, Mumbai, Maharashtra. Now what will happen? So the article students, okay, so the bonded labor team will be going to the client's office for what? Doing the audit, okay. So now when the article students so go over there, so to the client office. So generally as per audit engagement it will differ, but assuming that, so they need to spend for the hotel accommodation. Generally it depends upon the audit engagement. Sometimes a client will book the hotel, sometimes the chartered accountant, that is the audit office will chartered accountant's office will book the accommodation. It differs, okay. Now here say, so they are staying in a hotel. So Messrs. Breeze Hotels, like that one hotel is there, where in Mumbai, Maharashtra. So in this hotel that article students are staying, okay. Now who will pay the money to these hotels? Sometimes it will be client, sometimes it will be CA office. Say CA office has made the payment, okay. Consideration for hotel accommodation. So for this article students, the hotel accommodation is provided by the Breeze Hotels, hotel accommodation, and for that hotel accommodation, who made the payment? The CA office has made the payment. Now what Breeze Hotels did, they raised the invoice to the CA office. You understood? They raised the invoice to the CA office. Now in this case, what will be the location of supplier? Location of supplier. Location of supplier, if you see, the location of supplier here is Maharashtra. And what will be the place of supply? As this service is in relation to immovable property, any service in relation to immovable property, the place of supply will be location of that immovable property. Is it service in relation to immovable property? Yes or no? So what will be taken as the place of supply? Location of immovable property. So what will be the place of supply? Place of supply is Maharashtra. But what is the location of recipient? What is the location of recipient? To whom they raised invoice? CA office in Tamil Nadu. Now, is it intrastate or interstate? Is it intrastate or interstate? Intrastate. So we should not see the location of recipient. If you see the location of recipient, it becomes interstate. But we should not see the location of recipient. What we need to see is the place of supply. So based on this, it is what type of supply? Intrastate supply, which means hotel will raise what invoice? Intrastate invoice. They will not raise interstate invoice, even though the recipient is in the another state. Is it clear or not? Are you understanding? Sir, always it is like this? No. Here, what is the criteria? The place of supply. This place of supply is there na. Because of this place of supply only it is like this. What if the place of supply becomes Tamil Nadu? Then it will become interstate. Now, for some transactions, it will be, place of supply is different from the location of recipient. But for some transactions, location of recipient itself is the place of supply. Then it will become interstate. For example, let's try to understand this with another example, that say I am taking classes, okay. So there is a CA coaching center, CA coaching center. This CA coaching center is located in Tamil Nadu, and there is a CA student, and this CA student is located in Maharashtra. So they provided the coaching services, so Google Drive, okay, online classes or Google Drive classes, etc. Online classes. For these online classes, the consideration is also being paid by the student. Now, in this case, what will be taken as the location of supplier? Come on. Location of supplier is what? Tamil Nadu. Location of supplier is Tamil Nadu. And what will be the place of supply? So this will come under, training and performance appraisal services. Actually, this will come under training services. In case of this training services, location where service are actually performed will be taken as the place of supply. Okay. So where the service are actually performed? Tamil Nadu only, because the coaching center wherever it is there only the classes are being taken. That is, online class may be related to the students, but what will be taken as the place of supply in this case? Tamil Nadu. Okay. Suppose if it is not coming under training, so CA coaching actually will not come under training. Why it will not come under training? Is there any completion certificate that you get after completion of the classes? This is to certify that so and so student has successfully completed GST classes from THARUN'S Brainery. I will give you certificate and you can post it in your LinkedIn that you completed, one skill. Correct? Have you seen LinkedIn? What people will be doing there? So this only. They will learn something and they will post that. Okay. So crazy people are there in LinkedIn and all. And by mistake also don't go there. Because you will feel like, what kind of morons they are. So they will learn something. And one certificate they get. That certificate they will post over there. Certificate means something. If you write an exam or if you write a test, you should get that. But today, some 3 hours, 4 hours, one course will be there. That course you will complete, you will get one certificate. So that certificate you will post. How that and all will be counted, I really don't know. So then if that be the case, then CA also, lot of CA videos are there in YouTube. We can study all those things and we will get for one subject, one course completion certificate. So then CA completed. Every Tom, Dick and Harry can complete CA. Then you understood. So training requires a certification. Then only it will be called as training. So then where it will come, sir? Coaching will not come under training. So then where it should be classified? General provisions. As per general provisions, what will be taken as the place of supply? Location of recipient will be taken as the place of supply, because in CA coaching there is no element of training that is involved. If ICA is doing some course like advanced ITT or orientation or something, what is it they call us? GMCS. So that and all, they will give a certificate, correct? That will be coming under training. Okay. But this CA coaching, when you attend with some private coaching center, that is not called as training. That will be commercial coaching. For commercial coaching, what is the place of supply? Location of recipient. What is the location of recipient? Come on. Maharashtra. And location of recipient is Maharashtra. So what will be the nature of supply? Come on. Interstate or intrastate? Interstate. Are you understanding this, darlings? So now, until the time we complete place of supply chapter, we will not be able to classify whether a transaction is intrastate or interstate. Okay, that's why place of supply chapter is so crucial. Now, sir, why we need to classify this way? Because if it is a intrastate supply, then the type of GST will be CGST and SGST. Okay, if it is what supply? Intrastate supply. What is the GST that will be applicable? CGST and SGST. Who will levy CGST? Name itself says central government. Who will levy SGST? State government. Sir, what is the meaning of intrastate supply? Can you tell me once again without seeing the book? 2 factors. If location of supplier and place of supply is in the same state or same union territory, then it will be intrastate. If it is in the same state, then it will be CGST, SGST. If it is in same union territory, then it will be CGST plus UTGST. Understood or not? Okay. So what is an example of union territory? Pondicherry is not a union territory here. Pondicherry is union territory with state legislature. We need to treat it like a state only. Why, sir? Because Pondicherry, we have assembly, government, chief minister, set of cabinet ministers. It will function like a state, but it is called as union territory with state legislature. For GST purpose, it should be treated as what? State. So which act will be applicable there? UT GST Act or SGST Act? Yes, GST Act will be applicable there. Are you understanding? Then one more example. Pondicherry will not be the correct way for the CGST, UT GST. Daman and Diu, Dadra Nagar Haveli. This is now one union territory. Previously, Daman and Diu, Dadra and Nagar Haveli was treated as two separate union territories. Now they merged these two. So this is one single union territory, and there if the location of supplier and place of supply is there, then it will be CGST plus UTGST. Understood? So now tell me, in case of intrastate supply, what is the combinations that we will have? Either CGST plus SGST or CGST plus UTGST. Understood? Then from this, can you tell me what is interstate supply? What is interstate supply? If location of supplier and place of supply is not in the same state or same union territory, okay, then if it is not in the same state or same union territory, then it will be in different states, different union territories, or a state and a union territory, then it will be interstate supply. Okay, come on once again. If location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it will be known as interstate supply. That is the meaning of intrastate supply versus interstate supply. In case of interstate supply, what is the type of GST that will be applicable? IGST. So IGST full form, Integrated Goods and Services Tax. Now concentrate. CGST when levied? When? Which transaction? Intrastate. SGST? UTGST? IGST? Super. CGST levied by central government. SGST levied by? UTGST levied by? Central government. Central government. So it is not union territory, because union territory don't have the power of levy, because all union territories are under whose control? Central government's control. Then UTGST will be levied by central government. Sir, CGST is also levied by central government, UTGST is also levied by central government. Then why do we have separate head called as CGST and UTGST? Because CGST is the contribution of all the states towards central government, whereas UTGST is the contribution of the union territories. They want to maintain a separate demarcation between these two. Otherwise, if everything is put into one head, then we don't know how much contribution has been made by the union territories. For that purpose only, we are putting it into a separate accounting head. For example, in expenditure, in accounts, while doing accounts, expenses, you will classify into multiple heads now. Everything is expenses. Actually, according to me, the profit and loss account should be so simple. Revenue, expenses, we get the profit. For that, why we make one big table and we classify all those things? Wow, what is the need? Revenue minus expenses, profit. Correct. But why we bifurcate the expenses? For the sake of analyzing it. Correct. So how much is the wages? How much is the salaries? How much is the production expenses? So we need to know that, and how much expenses are because of some extraordinary activities like penalties if we pay anything, or whether we paid any interest for delay in payment, or taxes how much we paid. Everything we bifurcate because we need to analyze. Like that same reason, even though CGST is levied by central government, UTGST is levied by central government, but they want to know as to how much contribution is made. So that's the reason why two separate accounting heads we have. Got it? Then IGST levied by Central government. Sir, in case of intrastate, we have two tax structure, correct? Either CGST plus SGST or CGST UTGST. So we have dual GST model here. Yes or no? We have dual GST model. But in case of interstate, whether we have dual GST model? No. There is only single GST. What is that single GST? IGST. And who will be levying it? Central government. Whether state governments get anything out of that? Yes. Yes. Because dual GST model objective needs to be kept. How there can be only one government enjoying the entire GST? Even though IGST is collected by central government, they cannot completely enjoy the benefit. They need to share 50% with the. So why 50%? Usually in dual GST, what is the sharing ratio? 50-50. 50-50. So therefore, 50% they need to share with whom? State government. Which state government? For example, say this. There is a supplier who is located in Tamil Nadu, and there is a recipient who is located in Karnataka. Okay, and this supplier is making some sale of goods to the recipient, and for which the recipient has paid the consideration. And the place of supply, if you see, is the location of recipient. So the location of recipient will also be taken as the place of supply here. The place of supply is location of recipient. Now tell me, what is the nature of supply? Intra or inter? Interstate. Interstate. Now, in this consideration, what will be collected? Price plus IGST. Am I right? Now this IGST supplier in Tamil Nadu will pay to whom? Which government? To central government. The supplier will pay IGST. The supplier will pay IGST to central government. Now what is that I told you? In this IGST, 50% is retained by 50% and 50%. 50% of IGST. First 50% of IGST. Who will retain? Retained by CG. Okay. Then, how many CGs we have? One. So no confusion. Then 50%, remaining 50% of IGST will be given to. So how many SGs we have? 2. To which SG? Tamil Nadu or Karnataka? Huh? Tamil Nadu or Karnataka? Karnataka. Why? You are from Karnataka? Huh? Consuming state. So GST is a destination based consumption tax. Got it? Remember, GST is what? Destination based consumption tax. So therefore it should be given to whom? Consuming state. What is a consuming state? Karnataka. Shared with Karnataka, because Karnataka is consuming state. So this will be shared with consuming state. So that's the reason why GST is called as destination based consumption tax. Got the clarity? But who is sufferer here? Tamil Nadu. The producing state is having the issue here. Now this is with effect from which date? This situation is with effect from which date? With effect from 1/7/2017. What has happened before 1/7/2017? Before 1/7/2017, the same situation, let's apprise what would have happened if it is before 1/7/2017. Where is supplier located? Tamil Nadu. And where is that recipient located? Karnataka. And there is some sale of goods sale of goods for which the recipient will pay consideration, and this was called as interstate sale, not supply. Supply is under GST, but in the sales tax it was called as sale, interstate sale. Interstate sale. In case of interstate sale, what is the tax that was applicable? CST, Central Sales Tax. Central Sales Tax. So therefore, how much the recipient will pay? Price plus CST, Central Sales Tax. Now, the supplier in Tamil Nadu will pay that amount to whom? Central government or Tamil Nadu government? Tamil Nadu government. Why Tamil Nadu government? In last class I told you, even though CST is levied by central government, but it is collected and retained by state government. So state government of Tamil Nadu. So therefore the entire CST revenue was enjoyed by originating state. What was the originating state? Tamil Nadu. Now what happened? With effect from 1/7/2017. In the place of CST we have IGST. Correct. In the place of CST we have IGST. In that IGST 50% was taken by, and remaining 50% was taken by Karnataka, consuming state. Then Tamil Nadu is not getting any revenue. You got it? So all producing states will have this issue. So that's why many producing states did not agree for implementation of GST. So Tamil Nadu is a producing state, Maharashtra is a producing state, even Gujarat is a producing state. You got it? Sir, in India there are 28 states. What? 29? No. 29 or 28? 28 only. Why 28? Jammu and Kashmir is not a state now. Jammu and Kashmir became union territory. Actually we had 28 states. Then Andhra Pradesh got bifurcated into AP and Telangana, that became 29. Then Jammu and Kashmir, abrogation of Article 370 to the Constitution, Jammu and Kashmir, so was no more a state. So therefore, now at present we have only 28 states. In this 28 states, whether all 28 states are producing states? No. No, I'll tell you, Tamil Nadu is a producing state. Andhra Pradesh and Kerala are consuming states. Where is there in Andhra Pradesh production and all? Nothing. If you have any idea about Andhra Pradesh, you will be able to get the clarity that there is no manufacturing that is happening. So, but Telangana, yes, Telangana is a producing state. But here we need to understand something, that whatever goods which are produced in Tamil Nadu is not only consumed in Tamil Nadu, is also consumed in the neighboring states, correct or not? Which means on those goods which are consumed in the neighboring states, the GST revenue will not come to Tamil Nadu, but it will go to those neighboring states. And in the past, the entire revenue was going only into Tamil Nadu's government. So which means the revenue because of implementation of GST will come down or not to producing states. Yes, that's the reason why they did not agree for implementation of GST. Who did not agree? The producing states did not agree. And then central government gave one assurance to the state governments. Actually, this issue was highlighted by Tamil Nadu Chief Minister at that time. So, Jayalalitha, Selvi J. Jayalalitha. So, she is basically an educated Chief Minister. So, sir, that does mean other Chief Ministers are not educated? I did not tell that. If you are understanding that way, it's okay. Nothing wrong in understanding. So, but she is really an educated, female, and amazingly she has studied, because, when she was an actress also, so whenever the shooting is happening, usually in shooting there will be some gaps and all. They have to sit idle. At that time, she will be sitting and reading novels. She will not be interested in talking to others also. So that much she is educated when long back itself. Okay. And she read the model GST law as soon as it was released. And she highlighted this point in a press conference. Clearly she said, definitely Tamil Nadu will not agree, because Tamil Nadu government's revenue will come down because GST, they have made it as a destination based consumption tax. And following her, many states joined, even though they are not producing states, all opposition states. Kerala and all is not a producing state, but even they also joined. Why? Opposition. You understood or not? Then the ruling government don't have any other go. They need to convince. Reason being, GST implementation was a greater milestone for them. For 2019 elections, 2017, if the GST could be implemented in 19 elections, so they can say that we have made revolution in the tax law, that milestone they wanted. So that's why central government was so adamant that they wanted to implement the GST. At that time, the finance minister was Arun Jaitley. So what Arun Jaitley did is that he said to all the states which were opposing, so he said, don't worry, because of GST, if there is any fall of revenue from the base revenue, got it? From the base revenue, that is, you are getting some indirect tax revenue. So for your state SPA, okay, your state government, you are getting some revenue from indirect taxes in the past. Now, if GST is implemented, what is your problem? The revenue may go down, correct? I will give you that revenue, shortfall. Whatever is the shortfall, central government will give you. So then what is your problem in accepting for GST? Are you understanding? Why are you opposing now for GST? One reason. Sir, if GST is implemented, our revenues will come down. Don't worry. Central government gave assurance to all the state government to compensate the loss of revenue on account of implementation of GST. On account of implementation of GST, if there is any loss of revenue, who will compensate to whom? Central government will compensate to state governments. Now, state governments agreed for implementation of GST. So, successfully GST got implemented. Now, state governments are asking what you will take as the base year revenue. 2015-16, when GST was implemented? 17. So, 2015-16, you earned some money. That we will take as base revenue. But 2015-16, what we earned, and today it will not be the same situation because our tax revenue earnings will increase. Okay, so you put a growth rate, fine. 2015-16 base year revenue plus growth rate 14%. So therefore, you will be getting it as expected revenue. You got it? How the expected revenue is calculated? Expected revenue or estimated revenue, base year revenue plus 14% growth rate, compounding. Okay, 14%, 14%, 14% will be added. So this is your estimated revenue minus actual revenue from GST. You got it? Clear here? How estimated revenue is computed? Base year revenue plus 14%, estimated revenue minus actual revenue. This difference is there na? This difference will be given by central government to state government as a compensation. Now states are very, very happy. Super, sir. So now we will accept for implementation of GST because you gave the assurance to us. Now, what central government did is, superb, U-turn, twist. That is, they created a new law called as GST Compensation to States Act. Under the GST Compensation to States Act, they created a new tax called as GST Compensation Cess. And that GST Compensation Cess they are collecting from the people of India and they are giving it to the states. Now, I am central government. I gave you promise. What does it mean? I should pay out of my pocket, correct? But what I am doing? I am collecting it from the people and I am giving it to you. Okay. Generally, people who do this charities and all, what they do is that they go for donations with many people. See, you know what charity is? You earn some money. That money you spend, that is only called as charity. But what I will do? I will ask all of you, I want to do that work, so can you give me money? You will give some money. Using this money, I will do the charity, but in the charity, my photo will be printed. Hope you understood what I am talking about. Okay. So, state government, when they give one bag, what is that bag? So, for some festival, Pongal or Diwali, some bag they will give, which contains provisions and all. In that provisions bag, why Chief Minister's photo is required? Correct? Am I right? Okay, Chief Minister photo is also okay, pa. Chief Minister's wife photo, why is it required? You got it? Fine, that is also okay. Why Chief Minister's son's photo is required? Are you understanding what I am talking about? Whose money? Yeah? Whose money? Whether his father's money, his grandparents' money, whose money it is? It is a people money. People money, when we are spending for people, why you need to put your photograph on that? You got it? That is only happening here. Sir, you are collecting money from the people. Why you gave the promise? Before you gave the promise, did you ask the people opinion? Did you conduct any voting? That we wanted to give compensation to the states. For that we are recovering it from the people of this country. Did you ask the people? No. You have to ask, na. It is whose money? Our hard-earned money. You are taking it. You give here. You give. Already we are giving you some 50%. Na. From that you give. No, you are not giving from that. But you are taking it from the people. And the ill effect of this composition, like this compensation cess is what you know. They levied a compensation cess of, 16%. See this. GST is 28% on motor vehicles. On motor vehicles, GST rate is 28 here. Compensation cess is 16%. 16% compensation cess. Now, what could be the price of a motor vehicle? Ex-showroom price, that is excluding GST. An SUV you take 8 lakhs, 8 lakhs, 10 lakhs, 10 lakhs, okay. Now, on this 10 lakhs, GST 2,80,000, compensation cess 1,60,000. So, what is the total price of this before registration? Before registration, how much? 14,40,000. So, when you buy a SUV, you have SUV plus one budget car. How? 4,40,000 rupees. 4,40,000 rupees you will get one budget car, Alto, Quid, etc. and all. So, where is it? Inside the SUV. You have to open and see. Inside the SUV it is there. You understood? And so, 4,40,000 rupees we are paying as taxes. Okay. Manufacturer is also not getting that much money. One manufacturer who make that car also will not get that much margin. Hardly he will be getting some 1 lakh or 1.5 lakh. Okay. But because he need to pay to the dealer, dealer, showroom, he need to pay for them. He need to incur on the marketing. Every hard work he will put. But who is taking away the benefit? One company left the country. Ford. Tata, bye-bye. We don't need. How we can survive? When you are taking this much amount, then how people will be buying? And automobile consumption, that is the four-wheelers, so the production has dropped because the consumption has dropped. Now if you see, you go and ask any showroom, car ready, not available. They will take an order from you and they will be making it and they will give. So 3 months, 6 months, 1 year, 1 year. So recently I inquired this Nexon car, Tata Nexon, like that, nice car it is. So I inquired for that. They said, yes sir, 12 months waiting period. 12 months waiting period. Sir, by next year, some other new model will come, sir. So when the new model and all is coming, I will be buying the old model. 12 months waiting period is what here? Crazy it is. So therefore, that much production they have stopped. Reason being, consumption has dropped to a greater extent. And many people asked the finance minister, media and all asked, Madam, automobile sector is going down day by day and they are not able to get more revenues, etc. and all. They are shutting down the plants, employment is losing. So what is your opinion on that? because you have added this GST compensation cess only, this has happened. No, not because of GST compensation cess. Ola and Uber, people started traveling in Ola and Uber. That's the reason why they stopped buying the cars. That's the reason why production has come down. This is what she said, pa. Fact. I am not adding anything in this. She said this only, exactly this only. And people did not understand here that this compensation says 16%, which was an old story I am talking about. Today's story is 22%. Sir, this 16% compensation says today it went to 22% if you are buying any motor vehicle with greater than 1500 cc. 1500 cc and that 4 beyond 4 submeter, that 4000 mm na, that length of the car. Example, Seltos, okay, and this Creta, these cars and all, even Scorpio, Mahindra, that what is that, XUV 700, then Innova, all these cars will be having how much as the compensation is there? 22%. 28% GST plus compensation to literally 50%. You understood or not? Clear? So when you buy a car, 50% you are paying to whom? Government. As what? GST. Okay. And this money is used for what purpose? This 22% is used for what purpose? To give the compensation. To give the compensation to those states from where we are collecting, or we will collect from across the country and give it to those states where there is loss of revenue. Across the country, GST compensation cess is levied on the notified goods. On the notified goods, not on all goods, on notified goods. And this money which is collected will be given to those states which are having shortfall on account of implementation of GST. Okay, sir. Fine. How many years? This is okay, fine. They are giving compensation, so they are doing it. And for how many years? 5 years from the date of implementation of GST. What is the date of implementation of GST? 1/7/2017. 5 years. 5 years is what? 1/7/2022. Expired na? Over, right, as on today. But they extended it further here. Till 31st March 2026 they extended. So therefore GST compensation cess will be levied on notified goods up to when? 31st March 2026. So actually initially it was 5 years from the date of implementation of GST, and GST Council can decide to extend it for a further period. So they extended till 31st March 2026. So will it stop there? I don't know. It can be extended for a further period as and when the GST Council decides. Okay. Sir, who is there in GST Council? Who is there in GST Council? Central government or state government? Both. Both. Central government representation, Union Finance Minister. State government representation, State Finance Minister. Now, you go and ask a State Finance Minister about this. What they will say? We don't know all those things. Center has taken the decision. Don't believe in these words, because in GST Council the major representation is state only. States only is having the major representation. It is not the central government. States. So literally all the state finance ministers and union finance ministers are looting us. You got it? In what way? In this way. Here, why you need to extend it till 31st March 2026? So GST revenue for few states did not happen. So why it did not happen? You implement the GST law properly in those states. For example, Bihar, I told you na, Bihar and all. You properly go and implement there. If you implement there, whatever money that is earned from Tamil Nadu, whatever money that is earned from Karnataka, this need not be paid to those states. You understood? You properly implement GST in every state. Automatically that state's revenue will increase. So here what will happen? So some states, because they are not properly implementing the GST, so now who are all the sufferers? We. The general people, the general public are the sufferers. Sir, is the compensation cess applicable on all goods or only on notified goods? Only on notified goods. But this notified goods is not one or two. We have a big list of notified goods. I gave you an example of motor vehicle. Sir, on this beverages also there is compensation cess, sir. On beverages, this mineral water bottles is there na? On that, on this aerated waters. Where and all aerated water? All colas, okay, sodas, etc. and all, Pepsi, 7-Up, etc. On that there is compensation cess. Like that there are many goods, even on tobacco and tobacco products there is compensation cess. So there are many goods on which they are levying compensation cess, but these goods are notified from time to time. So can government bring in some more goods also into this list? Yes. They can remove the existing goods in the list. That is also yes, but I don't know whether it will happen or not. Okay, but addition is definitely possible. They are already increasing the rates also. So now tell me, what are the various indirect taxes, GSTs that we have? GST is not one actually. How many types of GSTs we have? So tell me, what are the 5 GSTs that we have? CGST, SGST, UTGST, IGST, compensation cess. Okay. So that is about the types of GSTs. CGST levied by central government on intrastate supply. SGST levied by state government on intrastate supply. UTGST levied by central government again on intrastate supply. IGST is levied by central government on interstate supply and 50% shared with consuming state based on place of supply. And we have even GST compensations as well. Now see this, whenever there is some import from foreign territory to a state, there is some import of goods. On import of goods, whether GST is applicable or not applicable, already we discussed this in the last class, whether GST is applicable or not applicable on import. Applicable. Why GST is applicable on import? Because in the past we had CVD and SAD. To counterbalance that CVD and SAD, so they have levied IGST. In the place of CVD, SAD, what is the taxes that will be applicable now? IGST. Okay. Then within the state, when the transaction happens, it is intrastate CGST, SGST. From one state to another state, it is interstate IGST. And again in the another state, intrastate CGST, SGST. From state to a union territory, it is what? Interstate, correct? From one state to one union territory, interstate IGST. Within union territory, it is not CGST, SGST, it is CGST, UTGST. Again from the union territory to foreign territory. On export also, what is the type of GST that is applicable? IGST. So remember, on import and export, which GST will be applicable? IGST. On import, export and interstate, what is the type of GST? IGST. Once again, on import, export and interstate, the GST will be IGST. And what are the union territories that we have for the purpose of applicability of UTGST Act? Total how many union territories we have for which UTGST Act will be applicable? 5 union territories. What are those 5 union territories? Already you said one. Daman, Diu, Dadra, Nagar Haveli. Then Pondicherry is not a union territory for UTGST Act. Andaman and Nicobar, then Lakshadweep, then Chandigarh. No, again Delhi is not a union territory without state legislature. It's a union territory with state legislature. Goa, you tell. Goa, why Mumbai? No? Ladakh, not Jammu and Kashmir, it is Ladakh. So again Ladakh is also union territory without state legislature. So these are the 5 union territories where UTGST Act will be applicable. What are they? Daman, Diu, Dadra, Nagar Haveli, then Andaman and Nicobar, Lakshadweep, Chandigarh, Ladakh. For these 5 union territories, what is the type of GST that is applicable? UTGST. Okay, and these 5 union territories are called as union territories without state legislature. So these are under whose control? Central government. Now, what are the 2 union territories with state legislature? Pondicherry and Delhi. Now one more, 3 you add, that is Jammu and Kashmir. Jammu and Kashmir state is bifurcated into 2 union territories. Union Territory of Ladakh, which is Union Territory without state legislature, Union Territory of Jammu and Kashmir, Union Territory with state legislature. So now 3 Union Territories are there with state legislature, which will be treated like states only. So which act will be applicable there? SGST Act or UTGST Act? SGST Act. What are those 3? Delhi, Pondicherry, Jammu and Kashmir. And how many states we have? 28 states. So 28 plus these 3 Union Territories with state legislature. So how many SGST Acts we have in India? 31 SGST Acts. You understood how 31 SGST Acts? 28 states plus 3 Union Territories with state legislature. So that's what I have given above in page number 4. In page number 4 I have given. We have one IGST Act. Why one IGST Act only? IGST is levied by, and we have only one central government, so one IGST Act, one CGST Act, and one UTGST Act for 5 Union Territories. Got it? For all 5 Union Territories put together, it is only one UTGST Act. Why? Again, who will levy? Central government. Our central government is only one. That's why we have one UTGST Act. Is it clear? But for remaining states and Union Territories with state legislature, we have 31 SGST Acts. So that's what I have given. Even though Delhi and Puducherry and Jammu and Kashmir are Union Territories, constitutionally they were given partial statehood. Therefore, CGST, SGST is applicable there. But for the other Union Territories, so it will be UTGST. And what are the other Union Territories? Andaman and Nicobar, Chandigarh, Dadra, Nagar Haveli, Daman, Diu, Lakshadweep and Ladakh. Now, have a look into this illustration in page number 8. So, I am making you run between the pages. You don't have to read it that way. You read it from 1, 2, 3, 4 like that. I will make you to turn the pages because, brick by brick I can construct, concept by concept properly, okay. And what other work you have, at least turn the pages so that you will be active. I am not making you write anything, so little bit, some physical effort should be there, no? Okay. Then say this. Location of supplier, Union Territory of Jammu and Kashmir. Place of supply, also Union Territory of Jammu and Kashmir. What is the nature of supply? Inter or intra? Intra. What is the type of GST? CGST and SGST or UTGST? SGST, because Jammu and Kashmir is not Union Territory without state legislature. It is Union Territory with state legislature. So SGST. Then next. Second one, Union Territory of Ladakh and place of supply also Union Territory of Ladakh. Now, intra, GST will be CGST plus SGST or UTGST? UTGST, because Ladakh is Union Territory without state legislature. Then next, Union Territory of Jammu and Kashmir and Union Territory of Ladakh. Interstate. And what is the type of GST? IGST. Will 50% be shared with? No, 100% to CG. Why? Because Ladakh is what? Union Territory without state legislature, which means that is under whose control? Central government. So 50% sharing is not applicable. So full 100% is retained by central government. Then next, number 4. Arunachal Pradesh, location of supplier. Place of supply, Union Territory of Jammu and Kashmir. What is the nature of supply? Inter. And what is the type of GST? IGST. Whether 50% is shared? Yes, because Union Territory of Jammu and Kashmir is not under central government. 50% shared with Union Territory of Jammu and Kashmir. Then next, below, supplier location is Chennai, place of supply Coimbatore, Tamil Nadu. Nature of supply, intra-state supply. What is the type of GST? CGST, SGST. CGST levied and collected by central government, and SGST levied and collected by which government? State government of Tamil Nadu. Then next, location of supplier Chennai, Tamil Nadu, place of supply Bengaluru, Karnataka, nature of supply is interstate. What is the GST? IGST, levied and collected by central government and 50% shared with state government of Karnataka. Then next, number 3, location of supplier Chennai, Tamil Nadu, place of supply Pondicherry, Union Territory having partial statehood. Nature of supply interstate. Type of GST? IGST, interstate, IGST. So who will collect? Central government. Will the 50% be shared? Yes. And 50% shared with Union Territory of Pondicherry. Then number 4, location of supplier Delhi, Union Territory having partial statehood. Place of supply Delhi, Union Territory having partial statehood. So what is the nature of supply? Intra-state supply. And type of GST? CGST and SGST. CGST levied and collected by central government. SGST state government of Delhi. So that we will write it as Union Territory of Delhi. Union Territory of Delhi. But for Union Territory it should be UTGST na? No. For 3 Union Territories, CGST, SGST only will be applicable. UTGST will not come. Chennai, Tamil Nadu, location of supplier, place of supply, Chandigarh, Union Territory, interstate supply. So type of GST will be IGST, levied and collected by central government and 50% shared? No share. Why? Union Territory of Chandigarh is completely with central government, so 100% retained. Then 6, location of supplier Chandigarh, place of supply Chandigarh, intra-state supply. So type of GST? CGST, UTGST. CGST levied and collected by central government, UTGST also levied and collected by central government. Okay. Then on import and exports, whether GST will be applicable or not applicable? Yes, applicable. On import of goods, IGST applicable. On export of goods also IGST is applicable. However, export will be treated as zero rated supplies. Zero rated supply means what? So, not that the rate is zero. The rate is not zero, but the burden will become zero. How the burden will become zero? First, I will be paying tax. Whatever tax I paid, I will get it as a refund. So therefore, the burden will become zero. That's why it is called as zero rated supplies. Okay. Even though we pay tax, but we get the refund of that. So that's why the burden will become zero. For the purpose of GST, export of goods and services are treated as zero rated supplies, but not treated as exempted supplies. So therefore, on import and exports, whether there will be IGST? Yes. But why, sir, you have given here cross? Because even though we pay the GST, but we get it as a refund. So just write down there, pay GST and get refund. Okay. So the burden will become zero. So that's why I have not given here. And in detail about this zero rated supply, we will be learning in charge under IGST Act. We have a separate chapter, charge under IGST Act, there we will be learning. So right now you need to remember what is the meaning of zero rated supplies. So in zero rated supplies, what will happen? Rate is not zero. We will pay tax and we get it as a refund. So the burden will become zero. If the rate itself is zero, it is not zero rated, it is actually nil rated and it will come under exempted. Got it? Rate zero means it is called as what? Nil rated. Nil rated. and nil rated are treated as what? Exempted. Okay, but 0 rated means the rate is nil, there can be any rate, but when you export it or supply it to SCZ, it will be called as 0 rated. So you just write down somewhere over there. So what are 0 rated? Export of goods or services, export of goods or services, and supply of goods or services, are treated as 0 rated. Export of goods or services and supply of goods or services to SCZ. Actually, supply of goods or services to SCZ, special economic zone, are treated as 0 rated. Okay. And what is the difference between nil rated and 0 rated? Nil rated versus 0 rated. In case of nil rated, rate of GST is 0, nil. Okay, but in case of 0 rated, burden of GST becomes 0. Okay. So means what? There will be some rate, we pay that rate and we get it as a refund. That's the reason why the burden of GST becomes 0. Then what is the purpose of IGST Act? Mainly we have CGST Act, SGST Act, IGST Act, UTGST Act, all the different acts we have. But for our exam, we don't have UTGST Act and SGST Act. Why, sir? Because SGST Act is not something different. CGST Act you take, copy paste, and you replace central government with state government, that is SGST Act. Means whatever section that we have in CGST Act, the same section we have in SGST Act also. You don't have to learn SGST Act. UTGST Act also the same as CGST Act. But in IGST Act, we have the separate provisions for the purpose of place of supply, interstate supply, intrastate supply, etc. and all is given in IGST Act. Generally, when I am referring to any section, that will be of CGST Act. If it is IGST Act, I will stress this is so and so section of IGST Act. Okay. Otherwise, it will be all the sections will be of CGST Act. And this already we discussed, that is position of goods under GST in comparison to earlier system, and look into GST compensation also we completed now, but that discussion we will complete now first and then come back to other points. Look into page number 15. GST compensation to States Act 2017. What is the objective of this? To compensate states on account of what? Implementation of GST. Due to implementation of GST, there will be some loss of revenue to them. So compensation cess is leviable on intrastate supply or interstate supply or both. With a view to provide compensation to states, underline that, with a view to provide compensation to states for loss of revenue arising on account of implementation of GST. Why will there be loss of revenue on account of implementation of GST? Because producing states will not get any GST revenue, and the revenue will be going to the consuming states and the central government. That's why there will be loss of revenue on account of implementation of GST. Then, what is the geography, that is levy across the country or only in those states where there is loss of revenue? All states across the country. What is the period for which it will be levied? 5 years from the date of implementation of GST, and it can be extended for a further period as decided by GST Council. Accordingly, it was extended or not? Yes. Accordingly, it is extended now. You look into the next page, you can see at the end, with effect from 1/7/2022, the period for levy and collection of compensations has been extended up to 31st March 2026. Okay, that is the extended time. But is it final? No. Can it be extended for a further period? Yes. Then come back. What are the goods which are covered under compensation cess? All goods are notified goods. Notified goods. This is the example of some notified goods. Not that only these goods are covered. This is just an example. Pan masala, tobacco and tobacco products, then coal, aerated waters, motor vehicles, motor cars. These are some examples of goods on which compensation cess is applicable. Should we remember the notified goods? No, not necessary. In exam they will be giving the compensation cess so and so percentage. Then on that product there is compensation cess. You don't have to remember the list of goods on which compensation cess is applicable. And computation. Now concentrate. While discussing one example related to that motor vehicles, here compensation cess I computed on what? Value. So whether I added GST and then computed compensation cess, or compensation cess computed on the value itself. Value itself. So therefore, while computing the compensation cess, whether we need to add GST or we don't have to add GST. We don't have to add GST. So this cess is in addition to GST payable and is computed on the transaction value excluding GST. Input tax credit. So when we are discussing about this input tax credit, there we will come across this point. And applicability, to whom it is applicable? All persons who are making, all registered persons who are making intrastate or interstate supply of notified goods other than those opting for composition scheme. There is something called as composition scheme. Rather than paying tax at the normal rates, people who are opting for composition scheme will pay tax at the reduced rates. For them, this compensation cess is not applicable. Got it? To composition scheme taxpayer, compensation cess is not applicable. Clear? Can you remember this? To whom? Composition scheme taxpayer, compensation cess is not applicable. This for MCQs it will be useful. Be careful in that. How it works? So we will see with the help of an illustration. See the next page. Which year is taken as base year? 15-16 is taken as the base year. In 15-16, the actual revenue 800 crores. Okay, this is 800 crores. Actual tax revenue means at that time indirect tax revenue to the state was 800 crores. Now, how we need to get the projected tax revenue? Plus 14%. So 800 plus 14%, 912 plus 14%, 1040 plus 14%, 1185 plus 14%, 1351. That's how we got the projected tax revenue. Now, from which year onwards compensation is payable? 17-18. Full year or in 17-18 from one date? 1st July. When GST is implemented from that date, 1st July, which means in 17-18, how many months GST is applicable? 9 months. So whatever you have computed, you convert for 9 months. So 17-18 projected is 1040. Now you convert for 9 months. So 1040 into 9 by 12, 780 crores. You understood how we got 780 crores? But 18-19 you don't have to do that, because for full 18-19 GST is applicable, and 19-20 also full year you don't have to do anything. So this is how you got the projected. What is the actual? For 17-18 actual is 1000. So that 1000 also you need to convert into, so 9 by 12, so 750 crores. Then 18-19 1240, 19-20 1314. This is what? Actual. Now you take 17-18. For 17-18 what is the projected? 17-18 what is the projected? 780. 780 minus actual 750. 780 minus 750 is what? So the 30 crores will be given as compensation to that state. You understood? To whichever state this particular computation belongs to that state 30 crores will be given as compensation. Then next 18-19, how much is the projected? 1185. What is the actual? More or less? More. So will they get any compensation? No. So when the compensation will be given? If the actual tax revenue is less than the projected tax revenue, they will get compensation. Now sir, will they return anything? No, no. There is no returning and all. If there is shortfall, that will be paid. But excess and all, they don't have to return that. Then 19-20, what is the projected? 1351. What is actual? 1314. What is the difference? So is the actual less than projected? Yes. So that 37 crores will be given as compensation. You understood? So this is about the points, how it works I have given. What are the key points that you need to remember is, first, base year. What is considered as base year? 15-16. What is the growth rate? 14%. And how the compensation will be computed? Projected tax revenue minus actual tax revenue. Okay. And for how many years this will be payable? Till 31st March 2026. Okay. So we completed this compensation cess also. Now come back to GST Council, page number 12. Tell me whether we have single GST model or dual GST model. Dual GST model. In dual GST model, what will happen? Both central government and state government shall levy. Correct or not? Which means, can only central government decide everything? No. Can state government alone can decide everything? No. That's the reason why a common decision making body was required. That common decision making body is known as GST Council. But who will be the members of this GST Council? It is not Prime Minister or Chief Minister, but the finance ministers will be the members of this council. So, for central government, we have one union finance minister. Correct? Then how many states? 28 plus 3, 31. For 31 states, there will be 31 state finance ministers. Okay. And this union territories. For union territories, one MP is appointed. So for the purpose of looking after the finance related to that. So union MP of state affairs. Okay. They are called as union MP of state affairs to look after that union territory. Okay. So therefore total how many members will be there in GST Council? 33. How 33? 31 states plus 1 union finance minister plus 1 union MP for the 5 union territories. So therefore 31 members will be there. Now sir, state, should they be finance ministers? State representative is state minister. Should that person be finance minister? Usually finance minister. But if the finance minister don't know English and Hindi, so then they can send any other minister also. You understood what I am talking about? Huh? It's like they can go, but not every finance minister in a state will be that much educated. Nah? You understood? They may not know anything just because they have got power, so they will become the minister. Is there any criteria to become a minister? No criteria. If you are chief minister's son also, you can become minister. Just a MLA you have to win one time. Okay, that much only. You don't have to do anything at all. So you can win as MLA in 1 year, second year you can become minister. No problem and all. So it's only about the family, blood, money. There are many factors like that. So, but education factors and all is not at all a criteria nowadays. You understood? Any Tom, Dick and Harry can become a minister. And therefore, what usually it will be finance ministers only, but a state minister can also go even though they are not finance minister. Okay. So therefore, what is the number of members in the GST council? 33. That's what I have given. In total, there are 33 members in GST council, 1 union finance minister, 1 union minister of state revenue, and 31 states finance ministers. And to call it as a valid meeting, because in GST council, lot of times, last it was 51st GST council meeting. Okay. So therefore, many GST, not that in a year they should be conducting only 1 GST council meeting and all. In a year itself, 3 times, 4 times also they will be sitting for discussion. Okay. So now this GST council meeting to be called as a valid meeting, every meeting requires a quorum, correct? What is the minimum number that should be present in the meeting is called as quorum, and that quorum is 50%, means half. Half means 17 members, correct? 33 here, 33 half is what? 16.5. So where they will go for that? So therefore 17 members will be taken as the quorum. Okay. Then what about the votes weight, sir? State government vote is also having the same weight as central government? No. Central government vote weight is only 1/3, but state government vote weight is 2/3. See there. The weighted votes are 1/3 for central government and 2/3 for state government. Decision is considered to be passed if 3/4 weighted majority is obtained. What does it mean? Let's see an example to understand this. See below. There is a proposal to increase the rate of GST on smartphones from 18% to 28%. Because lot of people are using smartphones. Without smartphones, we cannot think of the life and all. Now it is better to levy GST there. So people will pay. You understood? Actually, this is how government will be levying the taxes. Lot of people were not getting proper food at home. Why? Because people at home are very busy. So mom will be busy with cereals, and after marriage, so wife will be busy with this OTT platforms and all. So then who will cook food? We only should go and cook food and experience only. So therefore, if you don't know cooking food, then Swiggy and Zomato, if this is not there, we would have died out of hunger itself. You understood or not? So this Swiggy and Zomato, people started depending on that to a greater extent. Now finance minister identified, oh, lot of people are dependent on Swiggy and Zomato. Let's levy GST on that. The restaurant is unregistered restaurant. Why? They have not crossed the threshold limit for registration. The restaurant is unregistered. Concentrate. The restaurant is unregistered. But from that restaurant, you are ordering food from Swiggy or Zomato, there is GST on that. There is GST on the food. Who will pay? That Swiggy, Zomato will pay. Which means the price of the food will increase? Yes. Like that only, smartly. No, we need revenue. So now smartphones is what every person will be using smartphone. Let's levy GST 28%, 10% extra only they will pay. They will think that they are paying price for the smartphone. They will pay. So now this is the proposal. Who voted in favor? Madam will definitely vote in favor. One union finance minister. When madam votes in favor, sir also has to vote in favor. Reason? Union MP should listen. Okay. And then 4 state finance ministers have agreed. Why? Maybe central government ruling states. Okay. They have to agree. No other go. If they are not agreeing, then they will not get the budget allocation and all properly. So therefore, these people voted in favor, and 13 state finance ministers voted against. So what is the total number present in the meeting? 19. Quorum achieved? Yes, quorum achieved because total 19 people are present in the meeting. And what is the total weighted votes? Total weighted votes. Central government vote will be 1/3. So 1/3. State government and union MP also 1/3 and remaining will be 2/3. So 1 into 1 by 3 plus 1 into 1 by 3 plus 17. Correct? 17 only na? 17 here. How 17? 4 plus 13. I am talking about total weighted votes. Total weighted votes. So total weighted votes. This 1 plus 1. 2 votes will be having 1/3 weight. So 2 into 1 by 3 plus 13 and 4, 17. 17 into 2 by 3. So what is the total weighted votes? 12. And what is the weighted votes in favor? Weighted votes in favor. 1 plus 1, 2 into 1 by 3 plus 4 into 2 by 3, that is 3.3. 3.3 divided by 12 into 100, see how much? 3.3 divided by 12 into 100, how much? 27%. Is it more than 3/4? No. So, proposal will be accepted or proposal will be dropped? Proposal will be dropped. Understood how the voting will happen? Suppose, instead of these 4 state finance ministers, if 10 state finance ministers agreed, then what would have happened? 2 into 1 by 3 plus 10 into 2 by 3. 2 into 1 by 3, 2 into 1 by 3, so 0.67 and 10 into 2 by 3, 20 divided by 3 plus 0.67, so that will be 7.33. 7.33 divided by 12 into 100, even then it will be 61%. So actually how much majority we need? 3/4 majority. 3/4 majority means number of votes in favor should be 3/4 greater than 3/4 of the number of votes against. Correct or not? So how much should be the majority that we need to get? 75%. So it's not simple majority of 50%. It is 3/4 majority that is required. Only then the decision is to be taken. Otherwise the proposal will be dropped. Understood? So therefore this is what I passed down one comment. So states are having the power. If states decide, they can really bring a big change with respect to GST. So what we are thinking, actually it is the central government's decision and all, not necessary. So the states is also involved. So therefore we need to question the state governments, because the state government MPs, are you understanding? The state government MPs are not there in the GST council. The state government MLAs are only there. Clear? You understood what I am talking about? Sir, in the GST council, MPs are not there. MPs are there in Lok Sabha, Rajya Sabha. Got it? But who are there in GST council? MLAs, whom we are electing. So they are going into the council as state finance ministers. So they are only there in the GST council. So therefore the state government is having a key role to play in GST. So that too weighted votes are given more for state government for that reason only. Got it? Fine, yeah. Then what are the areas of recommendations by GST council? Up to this I understood. What are the points we discussed about GST council? It is a decision making body. Who are the members of that GST council and how many members will be there and what is the quorum, and then to take any decision how much of the weighted votes are required and how much majority is required, etc. Now what are the areas which they will be deciding? Generally you think and let me know. What are the areas? Rates, to increase, decrease the rates, then exemptions, to bring some goods into exemption or service into exemptions or remove the exemptions related to exemptions, and then notified about what? That's what, for what? Okay, so they will be having power to notify the goods which are applicable for compensation cess, and revision in rates, compensation cess rates also. Then procedures. What procedures? So return filing. So when the returns are required to be filed, what are the types of returns that are required? So these are the key areas where they take the decision. Taxes that are to be subsumed under GST, what are the exemptions that they wanted to give, and for which state how much is the threshold limit for registration, and then apportionment of IGST, and determination of GST rates including the special rates, then special provision for Jammu and Kashmir, northeastern states, Himachal Pradesh, Uttarakhand, any other issues related to GST. These are some areas of recommendations by GST Council. Then, sir, is GST Council a government body or a constitutional body? Constitutional body. It's not a government body. If it is a government body, it should listen to central government, but it is not a government body. It is a constitutional body, means it derives the powers from where? Constitution. In Constitution, what is the relevant article? Article 279A of the Constitution. Highlight that. Article 279A of the Constitution empowers the President to constitute this council. Then we have this concept of input tax credit, system of credit in taxes. Tell me what you know about input tax credit. You have any idea about input tax credit? What is input tax credit? At the time of purchase? Okay. So you get some benefit on purchase to adjust against your output liability. Okay. Say this. There is a trader. There is a trader. And this trader is making some purchases. On purchases, he will pay some price plus tax, correct? To whom? To his supplier, to his supplier. Again, trader is engaged in some sales. On his sales, from his customer, he will be collecting some price plus tax. Okay. And say the price paid on purchase is 10,000 plus tax is 1,200 rupees. Whereas on sale, the price is somewhere 15,000 and the tax is 1,800. So now this 1,200 is called as input tax. Got it? This 1,200 is called as input tax. Tax paid on purchase or tax paid on inward supply. So this purchases we call as inward supply part, because purchase is a word usually used in the context of goods, correct? But services we will not call as purchases. That's why we give a common name for it called as inward supplies. And for this sales, we give one name called as outward supplies. Outward supplies. Now, this 1,200 is known as what? Input tax. Input tax. And this is tax on inward supplies. Input tax. Then this 1,800 is known as what? Output tax. Output tax. Tax on outward supplies. Is it clear? Tax on inward supply is known as input tax. Tax on outward supply is known as output tax. This output tax has got another name, that is gross liability. The output tax is known as what? Gross liability. Now, what we can do is that while making payment of this, we can set off the input tax with the output tax. We can set off the input tax with the output tax so that the remaining amount that we pay, So therefore, what is the net liability? Net liability is 600. How we got 600? 1800 minus 1200, that is 600. 600 is the net liability that is payable to government. You understood? This is known as input tax adjusted against the output tax liability. So this 1200 is input tax and it will be like a credit. It will be like a benefit. So it will be called as input tax credit. Sir, but why it is like this? Simple logic here. I am collecting from you 1800. You are my customer. I am collecting from you 1800. This is 1800. Okay, I collected from you. In this 1800 rupees, already I paid 1200 at the time of purchase. Correct? Yes or no? Sir, I am collecting 1800 from you. But in this 1800, already I paid at the time of purchase 1200 to my supplier. So which I am recovering. So this is 1200 I recovered. Now what is left? This 600 belongs to that I am giving to government. You understood or not? So which means that is a net liability. Got it? Nothing but recovery of my expenditure. 1800 I will collect from the customer. 1200 I will recover. That is my money. Already I paid at the time of purchase, now recovered. So balance 600 I pay to government. You got it? So now this 1200 what I paid to my supplier, he will be paying it to government. So which means government got the revenue of 1800. How they got the revenue of 1800? So my supplier paid 1200, I paid 600. So therefore 1800 government is getting. So this is how this input tax credit system will work out. Okay. So now tell me, what is input tax credit? Tax paid on inward supply can be availed as credit and set off with tax payable on outward supplies. This taking credit, set off of credit will be called as availed as ITC, utilization as ITC. You understood? So this taking credit is normal general language. Convert it into a legal language. Availment of credit. And set off we will be calling it as utilization of credit. Come on, reframe the sentence. Tax paid on inward supplies, availed as credit and utilized for payment of GST or tax on outward supplies. Got it? This is known as input tax credit. So what will be the net liability? Gross liability minus input tax credit is the net liability, and gross liability is nothing but output tax. Input tax credit is input tax. So output tax minus input tax is the net GST payable. Is it clear, pa? Now, even through journal entries we can understand this. What is the entry for purchase? This trader you take, what is the entry for purchase here? Purchasers account debit. How much is the purchase price? 10,000 or 11,200? 10,000. Purchase account debit 10,000. Then input tax credit account debit, how much? 1,200 to supplier account. To supplier account or to bank account 11,200. So this 1,200 we recognized as a asset, current asset. You understood? This 1,200, is it really that we are getting this money? No, we are not getting this money. But whenever we pay at the time of purchase, rather than adding it to our cost, so this we will add to cost. Whereas this is recoverable, correct or not? This 1,200 is like recoverable. We get this as input tax credit and adjusted against our future liability. That's why we create a asset that is current asset. Okay. And that's why we created a separate account for this. Now, what is the entry for sales? Sales entry. Debtor or bank account debit. How much is the sale value? So 15,000 plus 1,800. 16,800. But to sales, how much we will credit? 15,000. And to GST payable. To GST payable, how much? 1,800. So GST payable is what? Asset or liability? Liability. Usually liability shows what balance? Credit balance. So liability is showing a credit balance here. It is a current liability. It's a current liability, and this 15,000 we will recognize as revenue. Okay, understood? Now, what is the entry for set off? Liability we need to cancel. Liability shows a credit balance. So to cancel, what we will do? Debit. So GST payable account debit. How much? 1,800 to ITC account. So ITC, input tax credit, is a current asset which shows a debit balance. Now we are using it. So to ITC account, how much? 1,200. So remaining amount we have to pay. So to bank account, that is 600. Okay. So this 600 is our net liability. This 600 is our net liability. Okay. And this 1,800 is our gross liability. And this 1,200 is input tax credit. Understood here, everyone? So that is about input tax credit, and we'll take a break. Thereafter, we will continue with the remaining aspects, and post break, we will also start with the next segment, that is segment 2, supply under GST. Okay.